Okay.
Is he coming?
If he's coming, I mean, what's the official thing? If he comes, am I still leading, or does he officially take it? Okay. Good evening, everyone. I'll call this meeting to order at 6:02. Roll call, please. We'll do committee members, Council Member Ray Santos.
Here.
Council Member David Fenn.
Wait.
Here.
Oh, she does it.
It's
My
okay.
bad. I'm sorry.
Either way.
Okay, that's what you're here
it's
for.
okay.
Let's do it again.
I'm getting over eager. I'm sorry.
Let's call the time first.
Yes.
Six-
So 6:02 is when we
Okay.
started.
Thank you much. Councilmember Ray Santos.
Here.
Councilmember David Fenn.
Here.
Treasurer Baron Janetti.
Here.
Chairman Steve Cooley. Vice Chair David Vanderpool.
Here.
Member Dennis Garcia.
Here.
And we are set.
Okay.
Okay. Action, any requests for excused absences?
I've received none.
Okay. Let's move on to the Pledge of Allegiance. Let's have, Baron, I'll have you do it today.
Okay, right hand over your heart, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, any conflict of interest disclosures? All right, so we'll have the public comment period here. This meeting will be open to the public and conducted in a virtual environment to be inclusive of all participation preferences. Public comment participation is encouraged by emailing any comments to the city clerk's office or by calling in using the phone number provided on the front of the agenda. I also forgot one thing, adjustments to the agenda. Looks like item 1 will not be happening, so you can go ahead and remove item 1 from the agenda.
And I have no written comments, but I'll check with the phone lines. Jackie, do we have anyone on the phone?
No, no callers.
All right, so we will go on to approval of minutes. So let's take a look here.
If there's no discussion, I'd like to make a motion to approve the minutes.
I'll second that.
All right.
I'll do roll call if you're ready. Councilmember Santos.
Aye.
Councilmember Fenn.
Yes.
Treasurer Janetti.
Yes.
Vice Chair Vanderpool.
Yes.
Member Garcia.
Yes.
Thank you.
All right, so we're moving on to recycled content paper and recovered organic waste product procurement requirements and purchasing policy. Looks like, let me click on that, and looks like we have Lisa Leach up there talking to us about it. Fantastic.
Thank you. Okay, that does sound like I'm on now. Good evening, committee members. Presented before you is the recycled content paper and recovered organic waste product procurement requirements. The legislature of the state of California, by enactment of the California Integrated Waste Management Act of 1989, established a solid waste management process which requires cities and other local jurisdictions to implement plans for source reduction, reuse, and recycling as integrated waste management practices for solid waste attributed to sources within their respective jurisdictions. The act encompasses mandates including Assembly Bill AB 341 and AB 1826, as well as the newly adopted short-lived climate pollutants mandate, which is Senate Bill 1383. Senate Bill 1383 builds on the existing legislation of AB 341 and AB 1826. The stated purpose of SB 1383 is to reduce organic waste disposal, recover edible food waste from the waste stream, and reduce methane emissions. The goal of SB 1383 is to reduce greenhouse gas emissions to 40% below 1990 levels by the year 2030. To achieve this, the target is to reduce organic waste that ends up in the landfill by 50% by the year 2020 and 75% by the year 2025. As a part of SB 1383, local governments are required to maximize the use and procure recycled and recovered organics products. As such, city staff felt it prudent to include the requirements in the current purchasing policy to comply with the California state requirements and have one document that addresses all city procurement policies. So Attachment A provides the current purchasing policy, including the addition of the required language to comply with SB 1383. In your attachment, you'll notice that is in the red ink. In addition to the required language to comply with SB 1383, a review of the purchasing policy was also conducted and 3 updates were made. The definition of purchase order exceptions was expanded upon, and exceptions to competitive procurement as found in Municipal Code Section 3.02.05 was added for clarification. And then finally, the purchase order changes section was added to define the process of amending a purchase order. So any change order in amount of $25,000 or more, or any change order which, when considered with the aggregate amount of all other changes to a purchase exceeds 10% of the original contract cost, shall be approved by the City Council. So the recommended action is to review and discuss changes to the purchasing policy and recommend modifications or recommend moving forward to City Council for approval. And tonight we also have Sue Foxworth, who is our solid waste and recycling manager. She's here to help answer any questions with the 1383.
I have a quick question.
You got public comment.
Oh,
Ask if there's any.
okay, public comment, I'm sorry. All right, so, any public comments?
I have no written comments. Jackie, do we have anyone on the line?
No callers.
All right, fantastic, then I guess we move on to committee discussion. And one question I had was, I wanted to find out, do we receive any money from the state for doing this? Or is it kind of an unfunded mandate? How exactly does that work? I'm just curious.
We did not receive any grant money for this. It is,
Okay.
SB 1383 is a mandate.
Right.
You've seen it with your green organics cart that you're required to recycle your food and organics waste. So it's all part of that mandate. And so this is to help the city when we purchase recycled products and everything.
Sure.
We can kind of enforce that.
Okay, yeah, I figured it was. I was just interested if you're mandated to make these purchases if the state is somewhat reimbursing you. But nevertheless, that's my.
I will mention something just to clarify. For SB 1383, CalRecycle did give a grant to help the city implement it.
Okay,
But this is just for the purchasing policy, just to clarify that.
okay. All right, any other comments?
Yeah, Mr. Chair, I have a quick question.
Okay, go ahead.
So, so I understand the 10% change for a change order going to the council. What is the reasoning behind the $25,000 amount? Is that a state mandate or is that something that staff came up with as a kind of a make sense general rule on that? Just
That-
wanted to get some info behind that.
Sure, that's our current policy for any invoice approval. So if you have a change order for 25,000, just a one-time change order, that would hit our threshold to take it back
Okay.
to council.
And any changes that would be within the general manager signing authority, then that really doesn't apply? Is that correct?
Any changes, well, it'd have to be under the 25,000, is that what you're asking?
Yeah, so if it's under the 25,000 or under the 10% on something like that, does that just go to the city manager and she takes care of it from that
Correct.
point?
Yes,
Okay.
correct.
All right, thank you.
Mhm.
That's all I had.
Yep.
Okay.
I'm trying to, maybe I'm brain dead tonight. I'm trying to understand this. I understand the recycling that the individual homeowners have of separating organic. Is this mandating the city to do it with all city disposable stuff? In other words, I'm trying to understand what we're trying to do here. Since already, the community's already doing it, so what's the city mandate?
So this is to help procure, when we're purchasing items, to purchase recycled items to help with the procurement and, yeah.
Gotcha.
And then the quick one in there, this one is only a policy and procedures right now for the city, right? Right, and because I have a questions on the recycling and everything. That's a totally different, I mean, because the compost and everything, are we gonna get credit for that or not? I mean, if you don't, I mean, you don't need to answer it because that's a totally different topic.
No, that's a great question. So with the enforcement of us trying to get the organics, the mulch and compost with the regulations of SB 1383, yes, that would go towards reporting to CalRecycle, our procurement of that. Mhm.
Very good, thank you.
All right, are there any more comments?
I do have one more, and it's in reference to Mr.
Sure.
Santos's comment.
Go
So,
ahead.
for example, for our maintenance department in terms of landscaping and so forth, and they'd have all this green waste, does that end up incurring an additional charge to the city, or do we get credit for properly recycling those materials?
Are you asking about the purchasing of the mulch or compost?
Well, I don't know. I guess I'm starting to fall in the trap that Ray was setting in terms of maybe this is a discussion for something else. But just, I understand with the purchasing thing, if trying to purchase recycled stuff, but I'm just wondering how far this ruling extends into the city for other things. I mean, I understand the impact that someone has at home. I understand the impact in terms of a restaurant. Where I get a little confused is, for example, I'll use the fire station that we're awarding a contract for. If they're purchasing material for that, and then the stuff is not used, or there's waste from that, you know, scraps and so forth, then this policy would then apply to that contractor for such items? Am I going down the right street on this one?
I guess I'm confused. So for this purchasing policy with the SB 1383, it would be the procurement of mulch, compost.
Oh, I get you. Okay.
Yeah.
All right. So staff, you know, would has a need for that to maintain landscaping throughout the city. They would then use this policy for such items then.
Yes, and paper product, recycled paper products and everything like that.
Okay. And is it only just in reference to recycled goods only, or is it carry more weight than that? I don't know. It just seems so new and so foreign on something like this that I'm not fully grasping it either.
So I'm sorry, can you repeat your question again? If it's just for recycled or if it's something more than
Yeah,
that?
is it just for anything that we purchase to encourage recycled, you know, material? And is it just green waste? I mean, you mentioned like the paper goods and that sort of thing.
Yeah,
But
just
I'm
this, I'm sorry, go ahead.
I'm just having a problem on, does it extend beyond that? What other examples could there be beyond that? and so forth. I don't know.
Sure. I think this policy that we're implementing, again, is for the SB 1383 regulations for mulch, compost, and recycled paper content. So purchasing
Okay.
janitorial products and stuff, making sure that it comes from recycled paper.
You think it's likely, I
Okay.
think, Mr. Fenn is asking, do you think this will creep into other areas? I mean,
Yeah, good way to put it.
Right now, it's
Thanks, Barry.
specified for the mulch and all that. Is it likely to,
Expand? I can't answer it,
Okay.
yeah.
But there's nothing under the general ruling right now that expands beyond that. We're covering, by doing this, then we meet the state requirements for what is written in law to this point.
Is it written the state? I'm sorry, I couldn't hear that.
So by us implementing this policy and updating our purchasing policy,
Mhm.
are there any other things that we need to update? Or are we satisfying the requirement that the city has to do?
This would satisfy
just
the
wondering,
requirement
so-
for SB
okay.
1383, correct?
Okay, all right, okay. Good
I
enough
can
for
help
notice, thank
maybe
you.
answer Mr. Fenn's question about it kind of creeping into other departments. Previous to this, we've had resolutions that state that the city will try its best to purchase recycled paper goods or paper, print double-sided, those types of things that we can control within the office. And then we also do like an annual report to CalRecycle. And it looks at the city as a whole, so they ask us if we recycle our grass clippings to help reduce the amount of waste that goes to the dump and things like that. So we have other things previously that have helped with recycling. This is just a new element to it.
Okay, and with that reporting, is there a threshold that we have to meet, or just the fact that we are acknowledging that we're making our best efforts as we move along?
I believe it's just an acknowledgement. I don't know of any thresholds, do you?
Yes, with the, there is a threshold with the CalRecycle newly with the SB 1383 for, I believe, your procurement of mulch and compost. So this would help with that.
Okay, all right, thank you.
All right, any more comments or questions from the committee?
I'll recommend that we recommend this for approval to the city council, to move it to the city council, that we make a recommendation for the recycled content paper and recovered organic waste procurement requirement purchasing policy as presented.
I'll second.
Thank you. I'll do roll call if you're ready. Councilmember Santos?
Aye.
Councilmember Fenn?
Yes.
Treasurer Janetti?
Yes?
Vice Chair Vanderpool?
Yes.
Member Garcia?
Yes.
And then I just wanted to state for the record that we do have alternate member Damian Butler on the line through Zoom.
All right, so moving on, let's go to 4, fiscal year 2021 to 2022, fourth quarter budget update.
Thank you, Sue. I'd just like to say
Ms. Eustachian, I guess you are up. I was supposed to ask for public comments at this point?
Not
No?
until after she presents.
Not sure after she presents, got it. Okay, go ahead.
All right, thank you. Good evening, committee members. I have a presentation for you, so I'm going to pull it up. Can everyone see that?
There we go.
There we go.
Yes.
Okay. What we have for you this evening is the fiscal year 22 fourth quarter budget update and financial status report. This evening, we're going to review the summary of cash balances, general fund revenue detail report, general fund expenditure detail report, wastewater fund revenue and expenditure detail report, and give an update on year-end closing and audit process. The summary of cash balances includes the banking activity for the month of June. The city utilizes different bank accounts for fund segregation. You will notice large activity within the Citibank checking. Citibank notified staff that they were no longer going to be collateralizing the city's deposits and would be closing the city's account. Finance issued an RFP for banking services in May, and all proposals were due in July. The city treasurer reviewed all proposals and sat on interviews with 2 finalists. and a staff report was taken to council on August 2nd to approve a contract with Wells Fargo Bank. City Bank has requested that the city keep the balance at a minimum through the implementation process. Therefore, the city opened a liquidity fund account managed by Public Trust, the city's investment advisors. This fund is a liquid investment vehicle option, is available for operations. As you will see on the next slide, $35 million was transferred from Citibank to liquidity fund held by trustee at U.S. Bank. This is the fourth quarter summary of cash balances, including investment accounts. And you can see the $35 million held by U.S. Bank, which was the main reduction within the Citibank account. And the investment report that we have this evening, which is the next item, we will be going over our investment accounts in more detail. Getting into the general fund, as of July 31st, the city has collected 128% of budgeted revenues. This number will increase as the finance department continues to accrue revenue through the end of August. Staff are expecting the fourth quarter sales tax payment to come in at the later part of August. The budget for sales tax is approximately $8 million, and to date, the city has received $19.5 million, not including the fourth quarter payment we are expecting. Permits have also exceeded budget, and these payments are recorded when permits are pulled, so staff are not expecting this number to increase. And finance is still processing entries for fiscal year 22, and all the transfers are expected to be made. Per the city's budget control and monitoring process, Finance Department will provide reporting on the department and fund level. Fund level reports have been included as a part of your packet. This table is general fund expenditures by departments. All departments are within budget. I will, however, note that there are $2 million in encumbrances remaining for fiscal year 22, which would include the fourth quarter fire services invoice. And Finance will continue to process invoices for fiscal year 22 through the end of August. So these are not final numbers. And this table provides for expenditures by type. Personnel makes up 57% of total expenditures and came in at 91% of budget. Utilities and fleet costs, mainly fuel, exceeded budget due to inflation cost increase experienced within the fiscal year. Structured costs are contributions from departments to the ISF and were budgeted within the transfer category. However, for reporting purposes, needed to be in the correct line item and are within budget. The general fund currently has a surplus of approximately $17.2 million, but that number will change as receipts and payables are accrued. Moving on to wastewater, the city collected 98% of revenues for wastewater and all billings have been completed. This resulted in revenues coming in below budget by about $220,000. Wastewater expenses in total remain below budget. However, seeing the general fund, utilities, and fuel inflation cost increases have resulted in those line items coming in over budget. And finance will continue to accrue payables for fiscal year 22 through the end of August. So these results are not final. Most of the encumbrances remaining for fiscal year 22, though, are expected not be carried forward to fiscal year 23. So with that said, the current surplus for wastewater is approximately $540,000, but that number will likely decrease as we continue to accrue payables. And an update on year-end closing and audit process. Finance will continue to pay invoices through August 31st. Departments are working on submitting budget carryover request forms for items not received or projects completed within fiscal year 22. An item will be presented to City Council in September for reappropriation of fiscal year 22 carryover items. Finance has had audit prep meetings with departments, and our auditors have sent over audit documentation request lists, which we are in the process of gathering all that information now. We expect the books to close on September 30th, and the trial balance will be sent to the auditors at that time. And the auditors will be here for fieldwork the week of October 11th. And finance goal is to present a draft annual comprehensive financial report to Finance and Audit Committee at the December meeting. And with that, I'll take any questions anyone has.
All right, are there any public comments?
I have no written comments. Lisa, do we have anyone on the line?
No callers.
So, next up is committee discussion. So, does anybody?
Our 2022, 2023 budget, I know we've gone over it. Are we taking into consideration some of those costs, like the fuel costs? I mean, that's quite a jump on that. Has that been figured out in the budget? Because I don't think those costs are going to go down appreciably.
Right, right. And we did figure in some inflation when we were doing the budget process. But again, that's something that we're going to have to monitor as we go through the fiscal year. And we do have monitoring in place for that, so we can review.
And on the good side on revenue, I mean, it looks like sales tax is really carrying us in a positive direction. Do we think that trend is going to continue?
We do, and that has been included in the fiscal year '23 budget.
So I'm looking at expenses here, and so I'm looking at obviously fleet costs, that's obviously quite a bit higher, but like you said, that's mostly from gasoline prices and such, right? All right, and the other one would be capital structure. We're at 146% there. What is the particular reason for that one being as high as it is?
So that was what I was speaking about with the contributions from the departments to the ISF fund.
Oh, okay.
They were originally budgeted in the transfers. So you'll notice that the transfers is below budget.
Oh, okay.
And this is just a line item reporting difference.
Okay, that works, thank you.
My turn. Quickly in here, on this, looking on the general fund and other items in here, and it shows that, is this our fiscal year and June 30, not July 31st?
Correct. So, but we are still doing, so you have up until August 31st to record transactions for your previous fiscal year. So this is as of what we have recorded for period ending June 30th as of July 31st.
Oh, okay. And then most of the, the accruals and everything in there, you'll do your GE and your journal entry in there. How much do you think? I mean, I know every year we look at it and some of the revenues is still not coming in. Even the CFD and all those good stuff, even the sales tax is not in yet, right?
Right, right.
So, and other expenses on that. Is there any other items that we might be, a big item that will be reflecting on the financial?
The primarily big item for revenue would be your sales tax, the fourth quarter sales tax.
Yeah.
When it comes to your expenditures, we're still waiting to receive that fourth quarter fire services invoices. And so that will be your large payment that will need to be accrued.
Okay. So by September, we have this all squared up and everything.
Right, right. And then
Okay.
so what I will do is these are not final numbers, and what you'll
Yes.
do is you'll see the final numbers when we bring back your draft
Okay.
financials from the auditors.
Yeah, because I'm looking on this, the revenue, I don't know if this is time through yet. I mean, Barry, you mentioned about the sales tax. Everybody looking at the sales tax, but I'm looking on the grants and everything, and how we have a good grants in there is 3.9 million or something, and we haven't reflect any cost on that yet. So that's why I've seen the the revenue versus our expenditures in there. We're looking around 30 million to 35 million. That's good. I'm not complaining about it.
And what will happen too is we're making those journal entries, and so if we receive
Yeah.
grant money for expenditures we haven't incurred yet, you'll see those revenues will go into a deferred revenue, so it's a liability account. And then you recognize the revenue at the time that you have the expenditure.
Yeah, I mean, it's good, man. I mean, keep it up. For now, I don't have other thing in there. I just thumb through in this one in here. Also on let me jump in on the wastewater revenues in here. We got the actual and the budget in here. We did pretty good. I mean, the sewer, we got 12 million and everything in here, and then the expenses. If I look in here, we're looking in around. You said 700,000 to 500,000. At
Right,
least positive on that.
500,000, but we are still posting those invoices.
And
so,
we're not
yeah.
really 100% full operation on that.
Right, right.
Wow, that's cool. Oh, sorry. I mean, that's great. Thank you so much.
Mr. Chair, I have a quick question.
Go ahead.
So Jennifer, in reference to that wastewater budget, when it comes to the surplus, does the council have a policy in place to where if we reach a certain threshold, either on the low side or the high side on what is to do with that, what is to be done with that money, or that it automatically come back to council, for example, saying, hey, we've collected too much, our balance is too big, what do we do? What do we do now? Or it's not enough and we're running into the red, what do we do next? What are those, are there trigger points in place?
So the policy states that you just must maintain 25% of your annual revenues as fund balance reserves. There is not a ceiling, so there is nothing that will trigger something to come back to council. But as we are reporting our balances, that is something that council can look at. For the fiscal year '23 budget, we did take some of those reserve dollars that were available and set up a wastewater ISF essentially for capital projects where they could do inventory replacement for some pumps and VFDs that they needed in operations. So there was some of those dollars that were used for that in the fiscal year '23 budget.
Okay, and then last question in reference to that, if there were a problem in the future and we were into a deficit, are we or are we not allowed to bring over general fund monies for that purpose?
The council can choose to subsidize the wastewater fund if they want to. So that would be a discussion
Okay.
between council.
All right, I mean, we're a long ways from that and hopefully never need to go there, but just wondering how it all works. So appreciate the info, thank you.
You're welcome. And I also want to note too that we're going to be going out to RFP soon for a rate study. So that will
Okay,
be
good.
coming up soon too.
Yeah, because then if we end up with too much of a surplus, we want to make sure that we're not overcharging in the meantime, so,
Right.
okay, thanks.
And I had a question, and you probably already mentioned it already, but I'm going to ask anyway. So I'm looking at the wastewater expenses, capital, equipment. The budget was 95,000. You're looking at 323 of it. That's 340%. I'm assuming that some large piece of capital or multiple large pieces of capital were bought, but what was it that pushed it to 323?
So those were mostly due to emergency repairs and pump
Okay.
replacements. And that, normally when that happens, you're using your contingency budget for that, but we like to put it in the line item that it takes place so you can catch it for capitalization purposes.
Okay, thank you. Any more questions?
Can I have a Chair?
Oh, yes, go ahead.
Quickly on here, just thumb through it on here, is the, on your actual, on the governmental funds in here, we got the general fund of 52 million in there, and then the expenditure we have is 35 million in there. And and then we budgeted, on 41 million in that. There's 11 million on that. I mean, what's the, number? Why there's a big difference in there? You're looking around 20% increase on that, which is, I'm not complaining, but I just like to understand.
But you mean as far as why we're not meeting up to what the budget
Why
amount is?
the revenue
Okay,
exceeded
well,
the?
we are still processing some invoices. I would
Okay.
expect a lot of your savings lies within your contractual services. Now, like I said, the departments are doing carryover request forms, and what that is for any items and projects that weren't completed in fiscal year '22. There was a budget amendment that was taken to council in May that had quite a few items, and since it was so late in the year, there were some projects and items that were not received by June 30. So we will be bringing forward an item to council in September for those specific items.
Is that including the SB1 funds?
No,
Because
so
right now,
this is in particular just
particular
general
the,
fund.
general
Yeah.
fund?
Yeah.
On that? Okay. Yeah, that's good. I mean, so the SB1 right now seems like we're not touching it. It shows on the statement right now. So we did receive 963,000 in there, and then there's no actual.
Oh, you're talking about, yeah,
expenditures.
in the SB1 funds?
SB1
So that is,
fund,
that
yeah.
is used on our streets and roads projects and the
yeah.
capital funds. And so we have not done our fourth quarter transfers for project funding, but
Good.
as of fiscal year '22 through third quarter, they had not spent those dollars yet.
Thank you. That clarify that. Thank you so much on that. And then on the especially on I did the the grants in there. We got 3.8 million, and I still have a lot of funds in there. The outstanding is around 3.5 million, we still, that fund is still outstanding, right?
Yeah, so what that is that's your ARPA fund.
Yeah,
The
I know.
SLFRF funds that came in.
Uh-huh.
And those are programmed within the CIP.
Okay,
But they are not spent yet, so we haven't incurred the expenditures, but they are programmed, but not yet spent.
very good, because the Measure A seems like we're utilizing it, the Measure A.
Yeah,
And then-
your Measure A is also going towards your streets and roads
I-
program through CIP.
That's right, and then that will be sunset within few years, I mean, a couple of years or two. That's good, yeah. That's all I have for now, Chair.
Is Mr. Butler, I know he's here, and he may not be able to raise his hand. Does he have any comments or
Sure.
questions?
Any more comments or questions?
No, I don't have no comments.
Okay. Anybody else? Any comments or questions? All right, let's go ahead and make a motion. Let's see, to recommend moving this forward to City Council for approval.
Is that the motion on this one?
I think receive and
You need to
file.
receive and file?
Yeah. receive
I'll
and
make a
file.
motion that we receive and file.
Okay,
the
yeah,
report.
that sounds good. Okay.
So we move on.
Okay, is that all we're doing?
Did I get a second on that one?
Okay.
Oh, we need a second?
Yeah, I think we need
Okay.
a second. that
I
one,
thought
but-
receive and file, okay.
I'll do a
Go
roll
ahead.
call. Councilmember Santos?
Aye.
Councilmember Fenn?
Yes.
Treasurer Janetti?
Yes?
Vice Chair Vanderpool?
Yes.
Member Garcia?
Yes.
Thank you.
All right, so next up is fiscal year 2021 to 2022 fourth quarter investment report, and Ms. Eustachian is still up, so take it away.
Yes, I just want to let you know that everything attached in your packet is all the reports related to the city's investments, including pooled cash investment reports, certification, and anything held within the trustee related to bonds with Wilmington Trust. I don't want to take up too much time going over these items because I did invite our investment advisors with Public Trust. Mark Krieger is here this evening, as well as Rachel Sanders and Christiane Suda with PARS, who are going to go over our Pension 115 Trust. So both of them will be giving you presentations. I'm going to go ahead and let Mark Krieger with Public Trust, and he's going to come on and give you a presentation on the city's investment portfolio.
Great.
Wonderful. Jennifer, thank you very much for the introductions. Before I begin, just want to confirm that my audio is okay. You can hear me clearly?
Yes.
Yes.
Okay, great. Thank you. Jennifer, thank you very much again, and good evening, committee members. It's a pleasure to be with you this evening. As Jennifer noted, my name is Mark Krieger. I'm the senior portfolio manager assigned to the city's portfolio. Unfortunately, my colleague Tom Tite was going to join us this evening, but he got caught up in the wave of travel cancellations and delays. So he is presently on an airplane, finally making his way back home. But again, we're very honored to be here this evening. This is a great opportunity to provide you with a little bit of insight in terms of the strategy on the investment portfolio and some important context with respect to what's taking place in the economy and the marketplace right now. Certainly, there are a lot of moving pieces, a lot of narratives and market themes developing that have implications for your portfolio. So we want to take this opportunity to just walk you through our current thoughts and perspectives and share with you the current status of the portfolio. And to that end, I have prepared some materials that you have copies of in your packet today. And in lieu of going over those page by page, and out of respect for your time, we'll focus on some of the highlights. And Jennifer, can you confirm that you can all see my presentation on the screen
Yes.
right now?
Yes, we can.
Very good. Thank you. So, you know, it's an interesting time in the marketplace right now. We're all, I think, very familiar with some of the cross currents, notably the situation in Ukraine, the impact that that has had on commodity and energy prices, global growth outlooks, the fact that we here in the United States, like many other countries, are dealing with inflation levels that we have not seen in 40 years. And in response to that, the Federal Reserve has adopted a very aggressive policy stance wherein they're trying to raise interest rates in an effort to bring demand back in supply, or back into balance with supply, and help rein in some of those surging inflation pressures. And that has prompted a lot of discussion about, whether or not the economy will be able to achieve a so-called soft landing, avoid recession as the Federal Reserve moves to tighten financial conditions and monetary conditions here in the United States, or whether or not, unfortunately, they may risk, through their aggressive policy actions, tipping the economy into a recession. So the first I guess topic, just speaking very broadly, the economy has very clearly decelerated from the economic reopening momentum that propelled us through much of 2021. In fact, the economy has actually contracted now 2 consecutive quarters, the first quarter and the second quarter of 2022. Most recently, the economy contracted by just under 1%, somewhat unexpectedly. It's prompted a lot of discussions about whether or not we are, in fact, already currently in a recession. Certainly, back-to-back quarters of negative GDP growth meets the definition of a technical recession. The actual definition of recession and dating of recessions is done by the National Bureau of Economic Research. They take into account a multitude of other information. But to be frank, it's prompted a lot of conversation about whether or not we may already be in recession, and whether or not the Federal Reserve will be able to carry through with the magnitude and pace of rate increases that they are communicating to the marketplace. The expectation is for growth to slow substantially from the rates that we saw back in 2021 through this year, and certainly out into the outlying years of 2023 and 24. And I would just posit to you that right now, consensus estimates for the full year calendar year 2022 are the economy will grow somewhere in the neighborhood of 2%. We think that there is a significantly high probability that those numbers will be downgraded substantially, given the very weak performance that we've seen in the first half of the year. The labor markets are one of the remaining bright spots in the economy. The economy continues to kind of regain jobs that were lost during the pandemic. In fact, we just through July passed through the employment level that existed just prior to the recession, to the COVID recession. So we have regained all of those jobs that were previously lost, but we're about 5 million jobs short of where we would have otherwise been had those trends kind of persisted through 2021 and through 2022. That is the positive news. We are beginning, however, to see some cracks, I would say, in the armor of the labor markets right now. Notably, initial jobless claims or initial filings for unemployment benefits, while very low by historical standards, have risen by roughly 50% from their lows back earlier this year. And historically speaking, when initial jobless claims increase by 50% from their cyclical lows, that tends to be a precursor towards a more significant deceleration in the jobs market and the broader economy. So the labor market is really one of the last areas the Fed is holding on to as they look to raise interest rates through the remainder of this year. And the continued strength of the labor market will be a primary determinant of how aggressive they're actually able to raise interest rates through the duration of 2022. Inflation, of course, is the hot topic. It remains a very clear and present danger, both for consumers and policymakers alike. Through June of this year, through July of this year, through June of this year, the consumer price index has risen by just north of 9%. On a headline basis, excluding food and energy, the Fed's preferred measure of inflation, just shy of about 4%, but both of those measures substantially higher than the Fed's 2% target. And it's really this acceleration of inflation that has turned out to be much more pervasive, much more persistent than the Federal Reserve was anticipating, that caused them to pivot their policy to become substantially more aggressive at trying to control surging prices, as that is having very detrimental impact on broader economic conditions. Most notably, it's impacting the consumer. Though wages are increasing in nominal terms by just north of 5% per year, in real terms or net of inflation, real wages are growing by negative 3.6%. So meaning wage growth at the national level is not keeping up with price increases, causing the consumer to fall further and further behind. We're seeing lots of anecdotal data regarding rates of credit card usage, credit card openings, personal savings being depleted, suggesting that the consumer is really struggling to keep pace with rising prices. And that is, of course, reflected in very subdued consumer sentiment. The University of Michigan Consumer Sentiment Index down just off of its lowest levels, going back to the inception of the index back in 1978. So consumers are really feeling the impact of surging prices. It's hitting household budgets and filtering through to the broader economy in a very negative way. And that's one of the reasons the Federal Reserve is trying so aggressively to rein in those price pressures. In terms of the Federal Reserve, they have raised rates extremely aggressively after waiting too long in the face of what they thought was going to be transitory inflation price pressures. They've turned around and pivoted and raised interest rates by 275 basis point increments, most recently at their May and June policy meetings. The next FOMC meeting is in September. They are expected to raise rates by another 75 basis points at that meeting. But what I would call to your attention, and this feeds into the portfolio strategy, is the graph you'll see on the right-hand side is a reflection of what is called the Fed funds futures market. I won't go into the details of exactly what that market is, but effectively what it tells us is how the market is handicapping their expectations for additional rate increases and now the potential for rate decreases. So you can see that in around February of 2023, the futures market is anticipating the Fed will have the Fed funds rate up somewhere between 3.25% to 3.5%. But then you can see as we progress through 2023, the market is already beginning to handicap a growing probability of rate reductions, meaning the Federal Reserve, in their effort to control inflation, raising interest rates, may raise rates too aggressively and risk tipping the economy into recession and have to reverse those actions through future rate decreases. And that is being reflected in other areas of the marketplace as well. Here, we're looking at the U.S. Treasury yield curve for maturities between 6 months and 10 years. By statute and by city's investment policy, your investments are limited to 5 years and then more specifically to the city's strategy, which is a 1 to 3 year strategy. We're really focused on those maturities between 1 and 3 years on the yield curve. And you can see that as the Fed began to raise rates very aggressively and the expectation of additional rate increases filtered into investment markets, yields in the Treasury market and in the fixed income markets more generally, rose very aggressively by between 286 and 221 basis points. So that meaning increases of 2.86% for 1 year rates, 2.21% for 3 year rates. So the entire US Treasury yield curve shifted higher in yields very notably. But the other thing that it did, and that will stand out to you, is that it flattened very aggressively. So historically speaking, investors are paid a higher yield for taking longer maturity risk and investing their capital further out longer term on the yield curve. However, with the Fed raising short-term interest rates, longer-term rates have remained comparatively more subdued, causing the yield curve to invert, which is somewhat anomalous, wherein short-term interest rates are now providing higher yields than longer-term interest rates. That's another reflection of the fact that investment markets are kind of handicapping the fact that the Fed is likely to raise rates too aggressively, risk subduing U.S. economic growth, and again, tipping the economy towards recession. And the last point to that end, here we're looking at the historical spread between 2 and 10 year Treasury securities. So the incremental yield that an investor is paid for locking their money up in a 10-year Treasury bond compared to a 2-year Treasury bond. And what will stand out is at present, or as of the publication of these materials last Friday, 10-year Treasury yields were 24 basis points below the yield on a 2-year Treasury bond, meaning you were getting less yield for locking your money up for 10 years as opposed to 2 years in a 2-year Treasury security. Historically, what's called the inversion of the yield curve, this dynamic where short-term rates are above long-term rates, that inversion of the yield curve is historically a very strong predictor of economic slowdown and recession. The gray bars reflected in this graph are periods of economic recession. And so you can see this familiar pattern where the yield curve historically tends to invert, short-term yields higher than longer-term yields, and then the economy slips into a recession. Hence all the focus that we're seeing in the media and otherwise regarding whether or not the economy has already slipped into a recession. In the last graphic here, just looking at other asset classes outside of U.S. Treasuries, one thing to note that in terms of the U.S. corporate bond market and other more credit-sensitive segments of the markets, we're now starting to see those spreads relative to U.S. Treasuries. So the incremental yield over and above Treasury yields that these more credit-sensitive sectors of the market are paying have also begun to rise. That is also reflecting, again, growing expectations of a turning point in the credit cycle, the turning point in the business cycle, where now the risks of owning more credit-sensitive sectors, those yields are beginning to increase relative to U.S. Treasuries. And we think that actually will provide some opportunities in the portfolio as we move through the duration of 2022. And I have now a couple of slides on the portfolios, but before moving on to a discussion of the portfolios, I thought I would just pause for a moment and see if anybody had any questions regarding kind of the economic data or the market data that I previously presented.
All right, does anybody have any questions or comments regarding the economic data? Should I ask for a public comment yet? Do you want me to?
We can. I
Okay.
can.
So any public comment on that particular thing?
I have no written comments. Lisa, do we have anyone on the line?
No callers on the line.
All right, perfect. Any questions for the committee? Okay, I think we're good. You can go on. Thank you.
Okay, thank you very much. So the first portfolio that I'll speak to is what we refer to as the city's core portfolio. It is the 1 to 3 year strategy that the city council had previously authorized. The city began funding that strategy back in December of 2021, which with an initial amount of $15 million. So roughly about a third of the $45 million that city council had committed to this 1 to 3 year strategy. Between December and your fiscal year ended June 30th of this year, we have been working with staff to build out the investment portfolio consistent with that 1 to 3 year strategy. I should point out, just as a reminder to the committee, that the investment services that we provide are non-discretionary to the city, meaning that we take staff recommendations for transactions within the portfolio, staff reviews, we have some dialogue, and then will either give us authorization or, steer us in another direction if they disagree. So I just wanted to make the point that it is a non-discretionary engagement at this point, wherein staff is providing the authorization prior to any of the transactions that we're actually recommending for execution. So as I noted, the strategy was funded initially with a deposit of $15 million. It was subsequently additional capital committed to the strategy, rounding out the roughly $45 million that was committed. Here on the left-hand side, you'll see the 630 portfolio characteristics. The portfolio's weighted average maturity of about 1.6 years. Typically, your 1 to 3 year strategy is going to have a maturity or a duration somewhere between 1.6 to 1.9 years. So as of your fiscal year ended June 30th, that duration, that maturity, we're at about 1.6, 1.7 years. Your book yield on the portfolio, meaning kind of the accrual rate of earnings on the portfolio based upon the original purchase of the securities, at about 2.07%. That compares to, for example, LAIF as of the same time period, down at about 1%. And so the idea behind the 1 to 3 year strategy that was approved, it would allow the city to move some appropriately sized portion of its portfolio out of LAIF, which is a very short-term investment vehicle, a little bit further out on the yield curve to take advantage of the higher yields that tend to be available on those longer term securities. And so here's a good reflection of the fact that your book yield, the accrual rate of earnings being generated by the portfolio at about 2.07% presently. The market yield of the securities in the portfolio, meaning these previously purchased securities between December and June 30th, if we were to repurchase them again today, their current market yields from their current prices forward at about 2.89%. Again, as of June 30th, that's a reflection of the fact that interest rates have continued to trend higher, meaning the market yields are going to be increasing relative to the purchased yields in the portfolio. And that would result in the unrealized change in market value in the portfolio as of June 30th. So relative to its amortized cost value, as interest rates rise, the value of fixed income securities or bonds will decline. That results in a roughly $500,000 unrealized decline in the total market value of the portfolio. The good side of rising interest rates is that as we are reinvesting either maturities or sales in the portfolio, they are being reinvested into a consistently higher interest rate environment. In fact, right now, as we are investing current maturities or other shorter term securities being sold and reinvested in the portfolio, currently purchasing market yields anywhere between 3% to 3.5%. So the portfolio yield will continue to kind of stair step higher with interest rates as reinvestment opportunities arise within the portfolio. In terms of asset allocation, it's a very well diversified and high quality portfolio, as you'll see in a moment. We have roughly 75% of the funds as of June 30th in U.S. government securities, about 9% of the portfolio in what we call government-sponsored enterprise or agency securities, 11% in the portfolio in U.S. high-quality U.S. corporate bonds. Those numbers have changed a little bit since this publication as we've added a few more corporate bonds to the portfolio to take advantage of their more attractive valuations. And that may be a trend as we look through the duration of 2022. But I think the key takeaway is a very well-diversified portfolio by asset class, very high quality in terms of the credit ratings of the underlying securities, as you'll see in a moment. Here is just a quick snapshot of the asset allocation and maturity distribution, showing you how the different asset classes are distributed in the maturity structure of the portfolio. By design, the bulk of this portfolio is going to be invested between 1 and 3 years. You have your short-term liquidity funds maintained in LAIF. The core portion of this portfolio will be a little bit further out on the yield curve, taking advantage of those higher yields that are available, that slope of the yield curve, with, again, the bulk of the portfolio having maturities between 1 and 3 years. And here you can see just the top 10 kind of individual issuers within the portfolio. Again, just illustrating the very strong diversification that exists within the portfolio. From a credit ratings perspective, it is an exceptionally high quality portfolio. That's a requirement of California state statute as well as the city's investment policy. What may stand out to you on this page is the differential between the AAA and AA ratings of Standard & Poor's relative to Moody's. That is solely because of the fact that S&P rates the United States, the issuer of U.S. Treasury securities, at AA, whereas Moody's still maintains that AAA rating. So that's the reason for the divergence in the AAA versus AA ratings between those two rating agencies. But the key takeaway is that it's an exceptionally high quality portfolio, and very importantly, in full compliance with your investment policy and with state statute. And here is a final slide in summary form, just again, a snapshot of the distribution of the portfolio by asset class since its inception back in December through your fiscal year ended June 30th. And you can see over that period of time, we built out the initial deposit, which was initially invested in money market fund balances, into the diversified portfolio that I just described. We do have some additional details on the individual security holdings. I won't go through these. You have had an opportunity to review the materials in their full form. And so before moving on to the liquidity portfolio, I'll just pause to see if there's any questions regarding the core portfolio that I just described.
All right, any questions? Any public comments?
I have no written comments. Lisa, do we have anyone on the line?
No callers on the line.
Okay. And so lastly, Lisa had mentioned the Citibank indicating to the city that they were no longer going to be collateralizing a portion of your bank balances. In response to that, and given the limitations on the local agency investment fund, the city did open up a liquidity portfolio with Public Trust Advisors, which was funded with a deposit of $35 million. Right now, that money is invested in a U.S. government money market fund, and we are currently working with staff to identify kind of future spending needs for the liquidity portfolio so that we can match individual security maturities with the city's future spending needs. So this strategy will be evolving into a shorter term portfolio consistent with the city's liquidity needs. But right now we're in the process of working with staff to identify those future spending needs to make sure that we size and schedule the individual security maturities appropriate to those future expenditures. So there will be more to follow at our next update on this portfolio. So Jennifer, with that, I'll conclude my remarks, and I'm happy to address any questions that you or the committee may have.
All right, we'll start off with public comments. Any public comments?
No written comments. Lisa, do we have anyone on the line?
No callers on the line.
All right, so we'll go to committee discussion. Anybody with questions?
Craig, I just want to clarify, it looks like based on the way that our portfolio has been structured, it's yielding more than it is now than when it was before when you took it over. You said something like we were at like 1% and now it's up to 2%, and obviously the interest rate's going up. But am I right to say that we're still below the inflation rate, so our money isn't keeping up with inflation? But it should, when inflation finally comes down, we should be ahead of it?
That's correct. So, unfortunately, that's one of the byproducts of the Federal Reserve's policy. When they lower interest rates to levels below inflation, it's very punitive to savers and short-term investors, and that's an unfortunate dynamic right now in the U.S. markets. In fact, even if you were to invest out a full 10 years, as far as this graph goes out, the available yields on U.S. Treasury securities, even out 10 years, are below 3%. So with inflation currently at 9%, that's a current negative real yield. And longer term inflation expectations, I would just call your attention to, are that over the next 10 years, the market is anticipating inflation is likely to average something right now at around 2.5%, 3%. So you're maybe slightly a positive real return based upon forward expectations. But right now, unfortunately, yields are suppressed deeply below the current rates of inflation. And that's
excuse me. I just wanted to say that we are positioned in the right way, but we can't control the inflation when it's going to come down to a reasonable amount. But the portfolio is being managed to the maximum right now.
That is correct.
Within our policy.
That is correct.
And my quick question would just to confirm that as interest rates rise, you are going to be taking that into account and investing into higher yield securities to maximize the amount of money bring it in, correct?
Yeah, that is correct. And here you'll see the maturity distribution. So we have a bulk of the portfolio currently invested in the 1 to 2 year area. And typically the way this strategy will be maintained is as securities roll down to below 1 year, we will typically make recommendations to sell those shorter term securities, reinvest into those longer term securities as interest rates rise to take advantage of the rising rate environment. So you don't necessarily need to wait for securities to mature, but rather kind of through a systematic and disciplined rebalancing process, those higher yields will be incorporated into the portfolio, on a monthly to bi-monthly basis.
That makes sense. Thank you. Any other questions? Okay, then I'll go ahead and ask to receive and file the report.
Hold on. We have our PARS, Pension 115 Trust.
Okay, go ahead.
Yes. Rachel, are you there? She's going to bring on her presentation. She has to go over the Pension 115 portfolio with you.
Hi, yes, good evening. I'm here. I'm glad to be with all of you committee members. And with me is Chris Suda from Highmark Capital Management, who is the portfolio manager on your 115 Trust. So let me go ahead and share my screen here. Okay, and put this in full screen mode. All right, so hopefully everybody can see this okay.
Yes.
Perfect.
Yes.
All right, so I will give just a very quick overview and background on the PARS 115 Trust that the city established back in December of 2021. And then I will cede the majority of the presentation to Chris Suda, who will cover the current investments. All right, so very quickly as a refresher for everyone on the committee, this trust has 3 different companies that are involved in the partnership. So PARS, the company that I work for, does the ongoing trust administration and consulting. And so we are sort of the quarterback of the team. We monitor all monies going in and out of the trust, house all the legal documents, and really ensure that everything is legally sound and sort of serve as the liaison between you and the portfolio manager if the staff ever does have questions. Some things we don't do. We don't actually hold any of the money in the 115 Trust. That responsibility falls to our trustee, U.S. Bank, that you'll see on the bottom left there. They are the fiduciary of the plan and provide the oversight protection as well as service custodian of the assets. And then last but certainly not least, as I mentioned, we have your portfolio manager here from Highmark Capital Management. Highmark is the investment sub-advisor to our trustee U.S. Bank. So based on feedback from staff, certainly there was a recommendation made on the investment strategy, and Chris and the Highmark team continue to monitor those investments moving forward, and she will be providing the update for you this evening. So a little bit of more background and context to why you set this up. Now, this unfortunately is out of date, as are most valuations as soon as they're printed. So actually, probably later this month, I would anticipate that the city should have updated CalPERS numbers to review. But as of right now, the latest that are on the CalPERS website are as of June 30th, 2020. So at that point in time, you can see that the city was right around 75% funded. You can see the changes though between the 2019 valuation and the 2020 valuation. So the unfunded liability had gone up by about $2 million. And the employer contribution you could see here for fiscal year 21-22 at 3.6 million is anticipated to increase to about 4.8 million, otherwise a 31% if you're looking at it in that context. So this is really driving why the city set up this 115 trust to proactively address those rising costs. A couple things I'll mention briefly here. This does not reflect the 21.3% return that CalPERS got at the end of fiscal year 2021. That obviously is going to help the city's funded status on the next valuation. However, it also prompted the CalPERS rate mitigation policy, which now lowers their discount rate from 7 to 6.8. So because of that lowering of the discount rate, there will once again be upward pressure on the city to make more contributions into the system. Moreover, we just saw that for fiscal year end 2022, they're at a negative 6.1%. However, that does not actually include a full valuation of all their assets. So some of their real assets are only valued through the end of March 31st. So I would anticipate once they've fully valued all assets in their portfolio, we're probably looking at double-digit negative returns for CalPERS for this fiscal year. So again, there is a lot of volatility in the CalPERS system, which again is one of the benefits of this 115 trust, in that you get to determine how you want to invest these funds, and it really does put local control into your hands. Okay, and before I turn it over to Chris to go over the investments, let me just quickly show you an overview of the current account that you have with us. So again, this was set up December 7th of 2021. The city manager was appointed as the plan administrator, so has the ultimate authority to make any changes to the plan. The strategy that was chosen was the moderate high mark plus strategy. And then you can see all of the activity here as of June 30th, 2022. So again, initial contribution actually went in March 2022 of 2.5 million. No additional contributions since that point, nor have there been any disbursements. Unfortunately, through this period of June 30th, as you just got the economic update, it's been a tough period in the stock market. There is a negative return of 153,849, putting the account balance at about 2.34 million at the end of the second quarter. So now that I've gone over that overview, let me turn it over to Chris, and she will provide some insight into your portfolio and what the outlook looks like. Oh, Chris, I think you're muted.
Okay, can you hear me now?
Yes.
All right, thank you. Sorry about that. After years of doing this, we would think that we've got this under control. Anyway, thank you so much, Rachel. I will not go into a lot of economic detail, as we've all heard a very good economic presentation. But since this is the first time we're doing this review, I wanted to go through the format a little bit and just some highlights. So as Rachel mentioned, you are in a moderate active strategy. At the end of June, we were about 4% underweight. So your stock or equity allocation was at 46.5%. The numbers in the parentheses represent the allowable range, so 40 to 60. So we are proactively managing according to what the market is giving us. Within the fixed income or bond allocation, again, we were at the low end of the range at 46.21%, with the allowable range again between 40 and 60. And cash, even though this is our first meeting, typically cash is not at 7%, but is typically between 2 and 3% is a normal cash level. So all of these positionings really show, reflect how we have looked at the economic backdrop, the market year to date, and have positioned accordingly. Within your equity allocation, we are predominantly in large cap, meaning domestic, both in the core value and growth arena, and I'll get into those details in just a little bit. mid-cap, that next tier down in the corporate structure at just under 4.5%, and then small cap at 7%. International rounds out the equity allocation at just under 7.75%. And then your real estate investment trust is just a very small allocation at 1.75%. So the performance through the end of June, I wish we could have had July numbers because July was a very good month, but through the end of June, the 1 month period, we were negative 5.2%. In the 3 month period, negative 10.1%. And then given that our inception date was March, that inception to date number at 10.39%. I will say the only things I would add to the economic outlook is that, number one, we're getting additional inflation data this week with the CPI announcement on Wednesday. Estimates are for 8.6% as March indicated. The prior announcement was 9.1%. So we're hoping to see that the rate hikes have impacted a little bit of a moderation in the CPI number. PPI number, the producer price index, is expected on Thursday. That number is estimated at 7.7%, and that last announced number was 8.2%. So again, reflecting somewhat of a moderation in that inflation data. The other question, obviously, is whether we are going to see a recession or not. Typically, we have not seen a rate hike cycle and an unemployment market that is unemployment being as low as it is, with rates rising and a recession looming. So these pieces of the puzzle typically don't fit together in this manner. But when we look at what has taken place from, a global pandemic to a war in Europe to escalating tensions in Asia, and we could go on and on and on. There are things happening this time around that we've really never seen before. So our estimate for Fed funds target for this year is between 2.75% and 3.25%. And we do believe that the core PCE number, the data point that the Fed prefers at 3.7% to 4.2%. So not quite getting down to where the Fed wants to be, but it's been a long haul. All right, Rachel, if you could turn to the next page. So this is really the detail of how we came up with that performance report. You can see there that in the 3 month period, I'll try to go with the longest period, your total fixed income portfolio was a negative 4.99%, while the benchmark, the Bloomberg Aggregate Index, was down 4.69, so we trailed by a little bit. Total equities, negative 15.9, and you can see there the bulk of the negative numbers are from that large cap arena. I will show you in just another slide where actually that came from. And then international, actually relative to the rest of the world, did fairly respectively in this 3 month period. Then REITs rounded out that allocation, also negative 15.1%, reflecting some of the rate hike jitters and some of the rotation out of real estate given the rising mortgage rates. Okay. This next slide is going to be, this actually shows you how we are invested in the portfolio, and you can see we are quite diversified between large cap, core value, and growth. We want to make sure that we can capture in the active strategy mutual fund managers that can actually beat their benchmark. I will say the core and value arena have contributed positively year to date, while growth, as well documented in the popular press as well as the financial networks, growth has really struggled. And I will show that detail in just a little bit. In the mid-cap area, we used to have a mutual fund. The mutual fund providers had struggled to bring up performance, so we opted to put in its place for the moment an index fund until we can identify a suitable replacement. And then you can see down in the bottom part that our fixed income allocation is all in active, mostly on the intermediate part of the curve, with some of the allocation to short term as well. Right. And then my last slide is going to be a little bit of an eyesore because there is a lot going on here. But what I would like to point to is the year to date, that third column from the left. If we look at the large cap equity funds, you can see there the dispersion between what we call the core, the value, and the growth managers. So the two last managers, Harbor Capital Appreciation and the T. Rowe Price Growth Stock Fund, both struggled. They have very large allocations to, what's known as the FANG names, to Tesla, to a lot of those very high growth, high momentum companies. And this is exactly why we want to be allocated to many different parts of the market. You can see there that value in comparison to growth really declined much less. And then the core providers actually did reasonably well too compared to the S&P 500 benchmark. We have the same situation going on in small cap, where you can see the undiscovered manager behavioral fund at a negative 7.9%, was much, much better than the Vanguard small cap. So really small cap growth had really, really struggled this year. We had an active manager that did even worse. So we're pulling out managers as we see them struggle. We actively monitor all of the managers and did not get a good response as to what happened with the prior mutual fund manager. And so again, we replaced this with an index fund. That's it for my slides, I believe, Rachel, and I am happy to take any questions.
Okay, we'll start off with any public comments.
I have no written comments. Lisa, do we have anyone on the line?
No callers on the line.
All right. So, any questions from the committee?
Yes, sir, I have a question.
Sure, go ahead.
So on the 7% cash that we have on hand, is there particular guidance on how much that should be? Is that a fair amount? And then also, are there any plans to use that cash on hand to perhaps buy in at perhaps maybe more of a market low compared to see what things have done? July was kind of a bit of a rebound. I know that no one can ever predict what's going to happen next, but some of those good stocks are on sale right now. So just a thought. So.
Yes, absolutely. So our cash guidance is 0 to 20%. And quite frankly, I think outside of March of 2020, I've not seen cash at this level. Rachel, I don't believe you've seen it this high either. So this is just really a reflection of us proactively being cautious in the month of June. July, we have already reduced cash somewhat. And so our process is such that we have a monthly asset allocation committee meeting. That meeting actually takes place this Wednesday, at which point we receive guidance as to the direction of where is this cash going? Are we allocating into, more bonds, into more equities? What part of the market are we allocating to? And then we execute on that. I will say that surprisingly, it really took me by surprise recently as I was looking at various accounts, but the money market funds that we do use for cash are currently yielding 1.82%. So while over the last many years, money market was yielding 0.1% or 2% and was really idle, money market cash is now not quite earned its keep, but is not as idle as it was in the past.
Okay.
Thank you
And
for the
then,
question.
and then last question with that, in entering in the market or for stocks that are currently owned, do you guys do any covered calls or selling puts to get into a position or anything like that? Or is it just purchasing, when you make the decision, then you go in and purchase that stock?
Again, a great question. We don't hold individual equities in this particular portfolio. Individual equities, individual bonds are purchased when the portfolio reaches a reasonably larger size. So I think we start at maybe 6 or 7 million, and that's when we start purchasing individual equities. We try not to get too complicated into covered calls or puts and whatnot, but the ability to do so is definitely there.
Okay, all right, good to know. And then when you make those recommendations and so forth, that doesn't need to go to staff, that we have given you guys the authorization to make the decision on our behalf, correct?
Yes, we have full investment authority over
All
this
right.
portfolio. Thank you.
Thank you.
All right, so I guess I have a question here. So I'm looking at like the S&P 500, looks like year to date fell based upon these investments like 30 again. Some of them didn't beat the S&P 500, some of them were considerably behind, like Harbor Capital Appreciation, T. Rowe Price Growth Stock. So is the plan to, I guess my question is, you don't have to give me all of your plans, but if you do see an underperforming asset, do you guys go through the process of seeing if that money could be allocated in a more productive manner?
Yes, absolutely. So we have a dedicated manager research team that does on-site visits, ongoing due diligence. We have weekly calls with the portfolio managers at each of these, rotating at these mutual funds. Because these mutual funds are owned across all of the PARS portfolios, there's significant impact if we were to take something out.
Okay.
We do put mutual funds on watch lists, on hold lists. We have an upcoming quarterly review. And in that cycle, we will definitely make the tough decisions. We are cognizant that managers do underperform sometimes due to, a bad stock pick here or there. What's more important to us is to make sure that the people process and philosophy stay intact. So that is more important to make sure that that's intact.
Of course, yeah.
Yeah.
No, the market, it goes up, it goes down. I just want to make sure you have the process to make those decisions, and it sounds like you do. So that is a good thing.
Thanks for the question.
Any other discussion questions?
Chair,
Sure.
on this, my question is, they asked you already on the allocations on this. When you do allocations, do you do, let the staff, be part of the decision on that? Asset allocation?
No, we have full investment authority over this portfolio, so we do not come back to staff to require or to request approval.
Okay, because if you do, okay, that will bother me. I mean, on personal aspect on this, because I've seen your allocations in here, your large cap equity funds. I like that. You got the Vanguard in there. I'm a Vanguard person. And then PEMCO is really minimal. I mean, I like them. I mean, because they're more on the bond market. And I like that. I mean, it balanced and everything. And you get an asset in here, the Vanguard real estate, which is very good. But the thing is, the way I see it, the funds in here is a long-term, really portfolio. And if we do, keep on moving this, I mean, I'm not saying that you're making money. We're not making money on this. I mean, it's all paperwork. I mean, that if we let it sit and everything advise us on the investments, it's only a paperwork loss. But if we let it sit in there a certain dollar amount, I know we lost $153,000 for several months right now on that. If we move that, my calculation will grow more on the loss. And I don't want that to happen to my city on this. And probably you know what I'm getting at on this. I mean, if we will, be conservative on the investments, that'll be good for for our staff in here to grow the pension plan on this. That's my 2 cents on this. I mean, but your allocations and the funds in here look good, but it's a matter of how you decide to move it. I mean, I like your Tiro, price growth. I like them. I mean, that's all.
My comment
Thank
is.
you. Yes.
My comment is,
Go ahead.
we recommended this to the council, and the council approved it as a means to be able to control our retirement, our CalPERS and everything else. And I think we have to look that we are in this for the long haul, and we can't look at the disaster the last few months have been. If we all did, we'd all be pulling guns out, shooting ourselves if you look at your personal portfolios. So it's very hard to judge when we get the first report after the disastrous market over the last 3-4 months. So I just, from my standpoint, financially looking at it, we're sitting right now, and I think the questions were good regarding, are they managing these things and looking for better opportunities on certain portfolios. But I'm pleased that we're in this, and we just have to weigh through the current economic situation.
Agreed.
I have a comment. Maybe we can also revisit this in the next quarter just to.
And you're right. We have, by policy, we need to review this once a quarter. That was something that was designed. It's in our policy, and then the audit caught it, but we had done it. So.
Okay, great. Any other comments or questions? All right, are we good to receive and file the report at this point?
You want to make the motion? Okay, I'll second the motion.
All right, roll call, right? Or do we have to do roll call for that?
Yes.
Yes,
Just
okay.
catching up. Councilmember Santos?
Aye.
Councilmember Fenn?
Yes.
Treasurer Janetti?
Yes.
Vice Chair Vanderpool?
Yes.
Member Garcia?
Yes.
All right, so looks like now we have subcommittee updates. So we'll start off, I guess, with Internal Control Committee.
I can maybe help. I'll take that one, but I think I can
Go
help
ahead.
with all these policies except for a couple that I'm not sure of, because some of them are completed and some of them are ad hoc. So internal
Okay.
controls is an ad hoc, as when we get the audit report, if there's
Got
an
it.
issue on there, we do it, or if we have something else.
Okay.
Reserve policy was updated. That's a completed action.
Okay.
CalPERS liability is completed. Was, at this point, we've made a recommendation for the PARS 115 trust. The RFP committee is established. It has been used, but again, it's an ad hoc as required by city manager and the team in there if they need that. Bond accountability has been on hold. We hadn't pressed on that, and I think we're missing somebody that was assigned for that. And long-term financial sustainability, I think that was performed by Mr. LeMaster and his group and presented a meeting 3 months ago. So the only thing I don't have is where we stand on financial training and CFD training and facting.
If I can
Questions?
add on
Okay.
the bond accountability, we actually, a document did come forward, if you remember that document, and that was completed.
Okay.
I can talk about financial training. I know we finished the PowerPoint and the video, and I emailed it to Ms. Station. So I don't know where we're at in that process outside of that. So,
Yeah, it's completed, it just needs to be uploaded onto the website.
Okay.
okay,
Great,
wonderful.
Great.
And then CFD training and FAQ committee. I know-
Real quick on that,
go ahead.
Elizabeth, can you give a quick update in terms of our staff hire for that or where we're at in that process?
I'm sorry, Councilmember Fenn, you did say staff hires?
Yes, because where we're at with that one in particular is we need an internal GIS specialist to work on some mapping for that. And I can't remember where we stand with that hire or when that person will be ready.
So we are, just as a recap, we are hiring 24 new positions in this fiscal year, and so HR has been very busy. I can report that the GIS analyst panel interviews are Wednesday of this week. And from there, the top 3 to 5 will go to the department head, who is Carrie Mendoza. She's over the IT department, and the GIS analyst will be in that department. And so from there, she'll interview 3 to 5, depending on the pool of candidates. And an offer will be made at that time. And then the person goes into background, and we do about a 2 to 3 week background fingerprinting. So we're probably looking, I would say, at least another 4 to 6 weeks out before we'll actually have a person here. And that is, of course, pending that we move people from the panel interviews to the department head interview. But I'm confident that we'll find somebody.
And then I assume then that individual will then have additional tasks to work on and so forth, and this would just be one of the new job tasks and so forth. So I would think we would be 2 or 3 months out before we have an update on that. Would that be correct?
I would say 2 to 3 months. We need to get the person acclimated, first of all, and every department is waiting for this person, so.
All right, super.
Yeah.
Okay, appreciate it. Thank you.
All right, let's see. I think that's it. Is there anything for the good of the order as far as subcommittee updates? Okay, so let's go on to future agenda items. Does anybody have anything for that? No? Okay. Okay, I guess not. All right, let's see. Ms. Janetti, go ahead and give us the meeting review.
Okay. Got a lot of notes here. You got about an hour or so? Look at everybody. Well, we did, I will say that, and then the council will get it, that we did recommend approval of the recycled contract for paper recovered. The financial report, the general budget is in a very positive shape, and we won't know till end of August the final details, but it looks like revenues will exceed our expenses. And similarly with wastewater, revenues may not be quite at their level, but expenses aren't quite at their level, and we just have to wait for that till the end of the year. I like the idea, and I know the council will, that the audit is ready to go, and that the initial draft for us to review would be December, so they could get it in January, which would be right on target with what we set out a couple of years ago. Investment report, I am supposed to report on this once a quarter, and I will not go into all the details other than to say that we did receive the investment report from Public Trust, and as it is, it's being managed, but we're in a lot of turmoil with the economic conditions. And similar with the PARS 115 Trust, the numbers are in a negative position right now, but they're negative everywhere. So the other thing are just my committee updates that I just reviewed earlier. I'm not going to review all of them right now. Did I miss anything?
No. Not in my mind. Okay, Ms. Eustachian, your comments.
Yeah, I just wanted to go back to our implementation with our change of banks. We are in the process of that now. It is about a 12-week process for implementation, so we will be working with Wells Fargo to get up and running. In the meantime, we're working with Citibank to try to keep our current account open through that process. So as I'm updating each month on cash balances, I will also update on how that process is going. And then for next month, I did not bring July's activity at this meeting. I really wanted to focus on where we were for fiscal year '22. But in the next meeting, you will see where we are at with July and August at the same time for fiscal year '23. And that's my comments. Thank you.
All right, fantastic. Then I guess we've come to, oh, go ahead.
No, I mean, after that, I have an announcement.
Oh, go ahead.
Okay?
Yeah,
Very good.
do it.
Hey, this coming September 22, we will have the state of the city, and we're inviting all the on this finance and audit committee join us, okay? And so we could set it up a table for you guys. Join us. I mean, we'll be happy to work together in there. So no finance talking and everything, straightforward. Let's eat, man. I mean, so you're invited. So please come, okay? Let us know, and our city manager will take care of that, and also Nicole.
And that was at what date and time?
That will be September 22, and that will be around 5:30.
22nd on the 5th.
Yeah, that will be on Toquit Canyon.
At
Yeah.
Tuckway.
Yeah, that'll be beautiful out there.
You bet.
So.
Mr. Butler, you're invited.
Oh, there you
Yes.
Yeah, yes.
Did you hear that? I mean,
Yeah, I mean, he's part of the committee and right now probably
That's
going to
good.
be moving on to a position because we're down a few positions. So he's part of the team anyway.
Everybody's invited.
that's good, and welcome. I mean, that's good. And I like to say also, thank you so much. I mean, are you talking? I mean, on this, Jennifer, good reporting, and excellent. I mean, you put together everything on this. I mean, the actual and all those stuff. Good job. Thank you. Sure.
All right, thank you. All right, so I guess we will adjourn at, what time is it? 7:38 p.m. And that's all she wrote. So have a good evening, everyone. And we'll see you next time.
Good job.
All right. A little excited at the beginning there.
Ah.